Hi, welcome, Julie. Welcome to our next interview as part of Empower with Julie Dickson, Investment Director at Capital Group. Julie has been in the industry for over 25 years and will be discussing the topic of emerging markets. Welcome.
Thank you.
So our first question is, Capital Group is a pioneer in emerging market investing, having launched the world's first EME equity fund in 1986. What does the emerging market universe look like today, and how far has it come in those 35 years since the fund was launched?
Well, gosh, this started over 35 years ago. And back then, two things were very different. First, the opportunity set was much smaller. And second, access to information was much more difficult. The universe was very limited. Korea and Taiwan were not really open. South Africa wasn't part of the index, neither was China. And Malaysia made up over 30% of the index over there. The Chinese market didn't even exist. And now those markets account for over 2/3 of the emerging markets index. Also, developing economies at the time were much smaller. Today, emerging markets account for about 40% of the world economy on a nominal basis. And of course, the majority of the population is still in those markets. So the opportunity is set to grow. It's about $8 trillion in size, which doesn't seem like a lot given the larger markets, but a lot has changed and there's a lot more room for growth.
That's really interesting. Thank you. And what are the trends that Capital Group believe will define the future of emerging market investing?
Well, there are several broad themes that stand out, from the acceleration of innovation in the technological development, such as biotech in China, the rise of digital payments, and of course, the semiconductor industries in Taiwan. And there are some really interesting opportunities which arise from the shifting consumption patterns and rising incomes in emerging markets, especially within travel and luxury goods, for example. In addition, the growing financial integration in emerging markets continues to present opportunities within insurance, but as well banking and areas such as fintech.
Okay, wonderful. And are the middle classes behind a growth in air travel in emerging markets?
Oh, definitely. Even before COVID-19, in Asia, every year, 150 million people flew for the very first time, and only about the 20% of the world's population has even ever been on an airplane. And travel is a secular growth story as incomes rise, as people tend to travel further and for longer, and also spend more. Of course, 2020 and 2021 were challenging for obvious reasons, but there's still a lot of pent-up demand for air travel. And we can already see this in countries that have opened up for tourism.
And another important market, how is the healthcare industry being transformed within emerging markets?
Well, healthcare is personally a very exciting area for me, and it's an area which will likely receive a lot more attention going forward. And this both from supply and a demand side. China's population is aging. Lifestyles, diet patterns, rising incomes mean that demand for a broader set of healthcare services is going to grow. And of course, on the supply side, the government regulation means that they've been a lot more supportive and there's an ample availability for venture capital money. This means that also the supply side is going to increase. And in our current portfolios, there are a number of high conviction investments in companies in the healthcare sectors, from bio and pharma tech companies to biotechnology, to innovation, to research and development. Although many of the populations are young and in the development stage, we take a general basket approach to approaching these companies to look for the best opportunity set in different countries around emerging markets.
And what is the background to the structural shift towards digital payments, for example, across emerging markets?
Well, the thing is, with our increased reliance on technology for work and recreation, the pandemic has largely brought about a change in habits. Shopping went online, theaters and cinemas became gaming, and Netflix, meeting people has now done over social media. This shift was reflected in the growing use of digital wallets. And people who had never tried it before were suddenly very willing to give it a go. So with a steady return to pre-pandemic normality, it is unlikely that people who have formed these convenient habits will revert back to old habits. And this is a long growth trend, which has received a significant boost from the pandemic with a lot of interesting companies coming to the market during this time period as well. And these trends have started well before the pandemic, but they're greatly accelerated with COVID-19. One example is dLocal, which recently went public. It's based in Uruguay. They facilitate payments in 29 countries for multinational companies such as Microsoft, Netflix, Spotify, etc. They have their own fraud models that they can maximize acceptance rates from clients, very strong technology, and a client-centric culture. They help to solve the problem for companies which expanded rapidly during the pandemic.
That's very interesting. Thank you. And does Capital Group see Indian equities as an expanding opportunity set?
Well, India is a very exciting place, and the country is at a much earlier stage of development, let's say, than where China is, for example. However, it is growing rapidly. It has a young and very entrepreneurial population. The availability of smartphones and the internet is right now exploding in India. With an expanding middle class, the number of households with incomes greater than $30,000 a year is expected to double over the next decade. Since coming to power, the current government has implemented a number of reforms to modernize the economy. And India is also interesting because there are macro reforms that are also micro reforms. And you can see this if you look at the World Bank's ranking of the ease of doing business, which is published every year. Back in 2015, India was number 142, and by the end of 2020 was number 63. So this goes to show just how far India has come in making it easier to do business locally and resolving issues such as insolvencies, transparency, and governance.
That's very interesting. Thank you. So one quick final question before we wrap up. What other areas of emerging markets do you believe offer potential diversification for long-term investors?
Well, it's impossible to talk about emerging markets without also considering opportunities in frontier markets, which are still underdeveloped, at least on the equity side. And so the opportunities tend to be very specific to a company rather than the market wide. And there are quite a number of examples of companies where we have found to be very interesting. On the financial side, in Kazakhstan, for example, both Halyk Bank is a traditional bank and Kaspi is a new type of banking, which are interesting. And in Uruguay, as we talked about just a minute ago, dLocal is a company that develops payments globally, is also interesting. So there are many ways to access emerging markets growth opportunities, even within frontier markets, but these need to be considered one company at a time.
Wonderful. Thank you so much, Julie. That was a really succinct answer to a very complicated question and a really interesting interview. Thank you so much, Julie.
Thank you very much. Take care.